All right, what up, guys? My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. Hook me up, smash that like, hit the subscribe, and let's get started. I'm going to try to tell you a story. I don't have it completely committed to memory, so I have some notes. It's quite an interesting story. It's starts with kings, has wars, the creation of the bond market, the creation of the central banking system in England, trade routes, slave trades, tobacco trades, and a whole financial scandal and a speculative frenzy that ended in what we now know as the Mississippi Bubble. I'm going to do my best to explain it to you. It goes a little something like this. In the late 1600s, there was this dude. They called him King Carlos II. People don't talk about King Carlos II because, well, basically, he is a product of incest. And back then, the Habsburg family, who sat on the Spanish Empire throne, they married within because they were greedy and they wanted to keep their money and their power. So King Carlos II had a whole bunch of deformities. He couldn't eat. His bone structure was bad. He had problems walking. He was infertile. He married twice, had no kids, and he was about to die in the year 1700. So he had to name a successor. And through a marriage in his family, he had a grandnephew named Duke Philip of Anjou, and who we now know as King Louis XIV. This was the strongest genealogical claim to the throne, was to have King Louis XIV of France sit on the throne of the Spanish Empire. And what that did was that united the French and Spanish empires, okay? And at that time, it really pissed off the British, the Dutch, the Portuguese, and the Holy Roman Empires, okay? And for 2 years, from 1700 to 1702, these guys tried diplomacy. They wanted to put in a different king. They had suggested Duke Charles of Austria, and King Louis XIV basically gave him the finger and said, no, I'm not having it. So the British Empire, along with Netherlands and Austria, declared war on the Spanish Empire. Now, this went on for 13 years, okay, till 1715. Now, during that time, a lot of money was spent, okay? There was feeding of soldiers, wartime efforts, wartime expansion, military equipment, weapons. It's a war. It costs a lot of money. So when it was all said and done, there was a treaty. It was called the Treaty of Utrecht and Restate. And basically, just to put it simple, it's pretty straightforward. When they came to peace, they had a treaty, and they said, look, King Louis XIV, you can stay on the throne of the Spanish Empire, but you need to renounce your claim to the French Empire. He agreed. It became a peacetime, but afterwards, there was a ton of debt. There was debt everywhere. There was debt in England. There was debt in France. We'll start with France. So France, after the war, brought in a new French finance minister, and he thought, okay, this is what we'll do since we have a heavy burden of debt. We will ask the general public for money, and we will borrow against the general public, and we will take on short-term loans and offer them their money back. Let's say I borrow $1,000, I pay you back $1,100, and we do it in 1 year. You say okay, and we sign a short-term loan note, and everything seems fine. The general public did that. It was backed by the government. And, when it came to pay, the finance minister cut it by 2/3 and screwed over its own people. Not only did they not get their interest, they didn't get their principal. Then this finance minister got caught debasing the coins with lower quality gold or silver, or less gold or silver, which has been done in other civilizations throughout time, such as the Roman Empire. The public debt was over 2 billion livres, which was up to 160% of the previous GDP in France. Okay. Now, over in England, they had the problems too, okay, from the war. So then came this guy named John Law, and he went to the king and the treasurers in England and said, hey, I know you have a banking system since 1694. It's 1716 now, but I want to give you a new structure. And this is what I'm thinking. I'm going to set up a company, a private company. And what we want to do is we want to issue bonds. We want to issue government-backed securities, okay? And we want to be able to lend. We want to be able to print money. But in order to do it, I need to allocate all the king's assets and be able to also only carry a fraction of the coin in the bank and lend against it. And so what he did was he went to all the noblemen and all the influential people and people of power across all the realms and gave them a portion of the company while it was private. So as they would sell these bonds and get money in, these noblemen and you know, people that held the shares, the ruling class, would make money. And later, he would ask them to write legislation so he could just hold a fraction of the coin. And now they could print money, lend money, issue government bonds and things of this nature. And later that became a central bank known to this day as the Central Bank of England, okay, and with charters to come after. Now, after John Law did that, he befriended the Duke of Orleans and started a company in America called Company of the West. He obtained it for exclusive privileges to develop the vast French territories in the Mississippi River area of North America. He soon monopolized the French tobacco and African slave trades, and by 1719 created the Company of the Indies. This gave him access to central banks in England of printing and lending and territories in North America, and a complete monopoly on France's colonial trade for tobacco and slave and anything else going from France to America. He then persuaded the French government to take over the collection of French taxation and collecting of taxes and minting of the money, controlling both the country's foreign trade and finances. So we'll back up. John Law, Scottish guy, comes in, works with England, gets with the noblemen, says, hey, I need legislation. We want to carry a fraction of the coin. We want to be able to print money, issue bonds. You'll make money by doing it. We want to do some lending. Let's build a central bank, call it the Bank of England. Meanwhile, I got some friends over in France, but I got this guy I know over near Mississippi, New Orleans, in America, and I'm going to get involved in the tobacco and slave trade, and I'm going to start trading with the French. And since now I have such a good relationship with this trade, I'm going to go to the French government and say, I want to collect your taxes, I want to print money, I want to mint coins, and I want to lend bonds. And so now he's got 3 different continents, and he's controlling all these ideas that are helping people get out of debt, keeping trade going, and building relations amongst the different countries, okay? Now, here's the kicker. This is the biggest pump and dump scheme. I mean, maybe not the biggest ever, but a pretty big one. So, given the potential for profits involved, public demand for shares in the Company of the West increased sharply. He took it public, okay? And, you know, this company was a trading company, and it traded with a government that had backed securities, and, you know, it seemed like a viable company to invest in. And so when he took it public, basically like a SPAC or an IPO, this thing blew up way beyond its earnings, okay? In fact, the prices went from $500 to $18,000 a share, which was way out of proportion from its earnings. By 1719, John Law had issued approximately 625,000 stock shares, and he soon afterward merged the Company of the West and the Company of the Indies. He hoped to retire the vast public debt accumulated during the later years of Louis XIV's reign of power by selling his company shares to the public in exchange for state-issued public securities. They were called billets d'état, which consequently also rose sharply in value. A frenzy of wild speculation ensued that led to a general stock market boom across all of Europe. The French government took advantage of the situation by printing increased copious amounts of paper money to the money supply, which was readily accepted by the state's creditors because it could be used to buy more shares of the company. This went on until excessive issue of paper money stimulated galloping inflation. And both the paper money and the billets of dittach began to lose their value. Okay? Meanwhile, the expected profits from the company's colonial ventures were slow to materialize, and the intricate linking of the company's stock with the state's finances ended in complete disaster 1 year later in 1720. When the value of the shares plummeted, causing a general stock market crash in France and other countries, though the crash was not directly attributed to John Law, he was the obvious scapegoat and was forced to flee France in December 1720. Later, just off topic, later he got caught up in a duel and they sentenced him to death. They sent him to prison. The guy escaped prison after he fled from France. That's a different story. And basically what France did is they had this enormous debt of his company and bank were soon afterwards consolidated and taken over by the state, which raised taxes in order to retire it. So yeah, long story short, King Carlos, Spanish Empire, created a successor crisis by bringing in King Louis XIV. They united the French and Spanish empires. The British and their allies did not like that. They tried diplomacy, ended up in a war. There's a lot of debt from the war. This guy comes out of the blue, financial wizard, John Law, helps England be able to become a central bank, the Bank of England, issue bonds and back securities, as well as lend and print money. Keeps his ties in France, goes to America, gets involved in the tobacco and slave trade, gets a monopoly on the trade back and forth from the Americas to France, gets in good with the French government and says, I want to be the one to collect the taxes, issue the bonds, print money, and do lending. And he controlled their trade and finances, and then created a whole pump and dump scheme because his Company of the West and Company of the Indies went public, and the French government got involved, printed a shitload of money, added to the money supply, created inflation. Everybody went into a bull run, and then boom, it didn't materialize. It didn't match the earnings. The shit came down. Boom, it all crashed. And I will tell you about bicycle mania, tulip mania, the South Sea bubble, the Australian land bubble. But today we want to learn about the Mississippi bubble and how all that went. So thought we would do something a little different today. Hope you have a good day. My name is Chris, and welcome to the Wheelhouse.